SoFi stock is nearing oversold territory as the RSI index is showing a value nearing 33 on the daily chart. SoFi stock is down about 43% from its all-time high, which was just north of $28 per share, and the only change is a general decline in interest from the Reddit community. Is it time to make like ravenous sharks and feast on some discounted SoFi stock before other investors bid up the price to new all-time highs? Maybe, maybe not. My name is Blake, and on this episode of 9 to 5 Investing, I'm going to talk about SoFi stock. I'm going to break it down from a fundamental analysis and a technical analysis perspective so that you can form your own opinion about whether SoFi stock is a solid long-term investment. SoFi is a fintech company that recently went public through a SPAC merger deal sponsored by the one and only self-proclaimed king of SPACs, Chamath Palihapitiya. SoFi was founded in 2011, originally as a platform for servicing student loans. SoFi was started with a pretty smart long-term plan. Basically, they wanted to capture students out of college that would likely be high-income earners in the future and give them great customer service with that servicing of their student loans so that they would actually come back to the SoFi platform for other services later in life. In a recent CNBC interview with the CEO of SoFi, Anthony Noto, Noto basically describes how the SoFi product lineup is designed to get customers hooked up with more than one SoFi product.
Each product is meant to be built best in class on its own, and after you use that product and we build trust with you, you'll choose your second product from us. And uniquely, not only are we a one-stop shop, we're making it so that each product works better when you use it with more than one of our products.
I am definitely intrigued by the idea of having a fintech company that has all of the possible financial products and services on one platform, because I generally believe that people like their finances to be centralized. Who wants to remember like 12 different logins for all these different financial products? It sure would be good just to have it all in one place. And I really do not think that it is much of a stretch for, just for example, a SoFi customer to be introduced to the company through student loan refinancing, for example. And then as time goes on, hey, maybe they want a checking account, maybe they want a savings account, maybe they take out a credit card with SoFi. You could see how this could all add up to a lot of business for SoFi over time. My point is this: if a customer's having a great experience with SoFi for an initial product that introduces them to the platform, why wouldn't they just think of SoFi for their future financial needs if SoFi offers the products? I really don't think it's a stretch that some customers would just stick with the SoFi platform for all their financial needs. I want to play one more clip from that CNBC interview because I believe that the CEO does a great job of explaining the advantages of the SoFi platform in a succinct way.
We're the only one-stop shop to do all of your financial services needs on one platform. Others talk about adding other products and diversifying, but only SoFi has done it. SoFi is the only place you can take out 4 different types of loans. It's the only place you can invest on a mobile app in single stocks without commissions, fractional share, robo-advisor accounts, ETFs, 5 of our own ETFs, as well as cryptocurrency. Also a credit card, and in addition to that, SoFi Money, which allows you to spend, pay, and save any way that you want. And so many people have talked about broadening the product and broadening the suite of products, but only SoFi has done it on one mobile platform.
The fact that SoFi offers such a broad suite of financial products and services is definitely an aspect of this business that stands out to me as I weigh the pros and cons and decide whether SoFi stock is a viable long-term investment. In my personal opinion, an economic recession or depression is not likely to put SoFi out of business because they offer such a broad suite of products and services. For example, if there is an economic recession and the Federal Reserve decides to lower interest rates, or if they just lower interest rates for political reasons, SoFi's personal loans and their mortgage refinancing business segments are going to do better. Another example is if the stock market crashes like it did in March of 2020 for a brief period of time, then SoFi Invest is gonna do better because more people are interested in trading stocks. You probably understand my general point by now. SoFi is not dependent on a single business segment that is directly tied to how the economy is doing. An interesting aspect of SoFi from a fundamental analysis perspective is that they actually do have a 68% gross margin, which is solid, but they are still losing money despite these healthy margins. I read part of the S1 securities registration statement that SoFi filed with the SEC, and it explains why SoFi loses money despite having these exceptional gross profit margins. The main reason that SoFi is losing money overall is because they are spending a lot of money on marketing and building out their platform with new products and services. Once the technology that powers the SoFi platform is fully coded, fully built out to support all the products and services that SoFi would like to offer their customers, then there will be a relatively small cost to maintain it. Once SoFi decides to spend less money marketing and advertising their business to obtain new customers, then this is another expense that will be completely eliminated potentially in the future. My point here is that these operating costs are not necessarily going directly into the costs of the products and services that SoFi is selling. If management wanted to reduce these operating expenses, then they could easily do so. SoFi is growing relatively consistently. On their S1 registration statement, the company talks about how they have experienced accelerating member growth for 7 consecutive quarters, and they have over 2 million users on their platform. I say relatively consistent with the growth just because SoFi did have a year, 2017, where they did $300 million in revenue, and then the following year, 2018, they only did $123 million in revenue. I suspect that this was an outlier year because of crypto mania that occurred at the end of 2017. But regardless, SoFi did actually have a compound annual growth rate of about 5.3% from 2017 to 2020. So I think that covers SoFi from a high-level fundamental analysis perspective. Now let's quickly go over the technical analysis behind the SoFi stock chart, which is getting more interesting by the day. It is no secret, SoFi stock is experiencing that typical post-merger sell-off that we have seen with a lot of different SPACs. The only difference here is that instead of happening like the day of the merger, the day the merger is complete, it's happening like a month after. And there's actually a factor that I believe is making this sell-off way worse than it would have been otherwise. This stock actually trended for a couple of weeks on Reddit after the merger was completed. So I think that there were a lot of people looking for that next GameStop or AMC, and they bought SoFi in the 20s as a result. And now that SoFi is in the mid-teens, there are a lot of people that are selling out of frustration because they bought in the 20s just a couple of weeks ago. So sentiment for the short term seems to be dead. But once sentiment is dead, once a stock is so beaten down that no one wants it, that's ideally when you should be buying the stock, in my opinion. If we pull up SoFi's daily chart, we see a lot of high volume red days in the last couple of weeks. There is a clear resistance line that has been drawn on this chart in blue. Unfortunately, the bears have done a great job at keeping SoFi below that resistance line. So I actually do see something very positive in this stock chart, and you might not necessarily love what I'm gonna say, but there is very stable support at $14 per share. So not saying it gets down to 14, but it's not even that far away from $14. And if it were to approach that $14 level, I believe it would make a pretty nice bounce off that level. I actually personally do not have a position in SoFi stock, but if I was looking to start one, that's where I'd be buying at that $14 level. Anyway, that's about all I have today for SoFi stock. If you enjoyed this video, please consider subscribing to the channel or maybe giving me a like. It's free and it really helps out with that YouTube algorithm, so I greatly appreciate it. Thank you so much for taking a part of your day to be here, for watching my video, and I hope you have a very bullish day. If you would like to watch a video about an e-commerce company that has been trending on Reddit for weeks, then click the thumbnail on the left. If you want to watch a video about why I believe Hyliion's Hypertruck ERX will beat the Tesla Semi, then click the thumbnail on the right.